All right, welcome to the daily market recap for Monday, December 1st. Happy December, everyone. Hope everyone had a great Thanksgiving and a nice long weekend. In today's video, we'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Uh, as you guys could probably hear, I'm not feeling the greatest. That's why the camera is off. So instead of showing more of my ugly face, we could take a look at some pretty charts. We'll start with the NASDAQ, down 0.3% today, but started with a pretty sizable gap down, tested the 5-day moving average, got bought up within the first 30 minutes, actually went green on the day at one point, did reject right where we rejected or right where we closed on Friday at this resistance gap, and then closed a little bit lower in the daily range. But overall, this is the type of action that we would hope to see after a big 5-day rally back through all the key moving averages, kind of from oversold to overbought in the short term, is test the market demand with some gap downs, with some shakeouts, some weakness. And overall, if we could pull back even into like the 50-day, the 20-day down here at 609, any type of higher low and volatility contraction from the indexes would be healthy overall. S&P 500 a little bit weaker, did have an unfilled gap down today, closed lower in the daily range, down 0.46%, still above the 5-day EMA, and does look a little bit better than the NASDAQ because we're so close to all-time highs. Just a little bit weaker today. IWO, the growth stocks of the Russell 2000, down 1.7%, closing back under that 50-day moving average with a gap down. Same kind of thoughts on this. A higher low at the 10 and the 20-day EMAs, or even like a little bit further down. Overall, would be healthy for the market. We had that 5-day rally, some kind of sell-offs, but we'll look for higher lows because we're seeing plenty of individual stocks and themes kind of pop up in the market and showing strength. So. ARKK continues to act a little bit weaker than the rest. Gap down, lost the 20-day EMA, closed at the 5 and the 10, right at the support gap here, down 2.6% on the day. And overall, just like clearly not as close to its previous highs as NASDAQ, S&P 500, or IWO. Switching over so we can take a look at Bitcoin. Big flush today. So we had a rejection of the 20-day EMA last Friday, kind of choppy days Saturday and Sunday over the weekend, and then last night, this morning, Bitcoin flushed, lost 90K, went all the way down to around 83.8, which still would be a higher low overall. So hopefully that's what we are getting. We had the shakeout to 80K back last Friday, or 2 Fridays ago, excuse me. Big shakeout today, and hopefully we can build a higher low there. This was showing relative weakness kind of coming into the day. So it makes sense as the market got extended in the short term and it was already showing relative weakness. When we had some type of pullback in the market, this felt a little bit more of the brunt. Ethereum, similar action, rejected the 20-day EMA, distribution day today, kind of breaking down from this bear flag, but still potentially a higher low overall. We'll take that day by day. Getting into the liquid leaders, only two of them were positive today, MU and AAPL, Apple. MU, really strong action over the past couple of days, getting over that kill bar high from November 20th, Thursday. That is where, if you're interested in a leading stock in the market, we should be above that kill bar high. And for MU, we got there last Friday, gap down today, kind of a bullish engulfing candle, closing into that resistance gap today, but really great action overall. Apple, new all-time high, new all-time closing high. Pretty tough to be bearish to the stock market when Apple is doing that. Google, very nice consolidation just into that 5-day EMA on declining volume. Basically, since the highs, we've seen volume decline, volatility get condensed, still closing right at that 5-day EMA. So a little pop back through today's high. That could be an ad spot for this name. Eli Lilly, second day pulling back after its monster move into new highs, settling in right at the 10-day EMA. A lot of the healthcare names in biotech were relatively weak today. They've been so strong. Now that everyone's talking about them, it's due to kind of pull back at some point. So down 1.6%, but on lower volume. NTRA, same exact boat, down 1.9%, closing right at the 5-day EMA. Not the worst seen. LITE, little gap down, closed kind of middle part of the range today, down 2.3%. The sooner that we can get through that gap down zone, the better. GH, another healthcare related name that's been acting slightly weaker the past couple days. Little gap down, close under the 5-day EMA, down 2.9%. But if this can come back and kind of retest this breakout point, the gap zone and the 20-day moving average right around $100, that is a spot that you should have an alert on. That's where I'll look to get involved. For solar, little pullback today. Some of the solar stocks actually got beat up quite a bit. I know Canada Solar gapped up, then sold off, but SEDG was weak. First Solar a little bit weak with the gap down, closed near the low of the day, but we do have that 10-day and the sport gap there. Then AVGO gap down off of the highs, closed right in the 5-day EMA. Um, Maybe this could pop up with CRDO's earnings. They're up about 17% after hours last time I checked. Getting into the industry ETFs, cannabis ETF up almost 11% today. We bounced back, kind of built a bull flag into that 200-day moving average. Now we've popped the 10 and the 20-day. Still want to see like this kind of turn around before I get interested in trading it, but thought it was interesting that it was up 11%. XLE really, really feels like an emerging third. Oh my gosh, emerging theme to me. My bad, guys. Continues to build out higher lows, first under the 200-day move. Well, first under both the 50 and the 200, then just under the 200, then at the 200, now at the 50. Today, gap up, kind of a stronger close compared to the indexes and compared to the S&P 500 on a pickup in volume. And zooming out, really, really large base here. So I know not many people are involved in oil and gas names, but that is a theme that I would keep an eye on. Another one to keep an eye on is retail XRT. Another strong day today, even though it closed only up 0.3%. We at least attempted to get through this resistance gap and found that there are sellers still at that level. But I'll go back to XLV after this, but wanted to point out how these emerging trends, they usually have a very ugly close followed by an unfilled gap up that reignites the uptrend, catches everyone off guard, gets them as negative as possible on the group before railing up, and now we're looking for a higher low. And if we take a look at XLV, the healthcare ETF, which every single person has been talking about for a couple weeks now, we were talking about it down here when we had the ugly close on September 25th. I was extremely, extremely bearish healthcare after that candle. But instead of following through to the downside, we actually got an unfilled gap up and a strong close, kind of an inside day the next day, and then follow through to the 200-day moving average. At that point, healthcare was a theme that you should have had on your radar as a potential emerging theme. We built higher lows, had relative strength all throughout this kind of pullback in the general market, and then just ripped higher. So XRT, I think, is a theme to focus on. There's a bunch of retail clothing stocks that are showing great relative strength. PEJ, the leisure and entertainment, we saw Wynn, we saw Las Vegas Sands, we saw Expedia.com actually showing some great strength. So these themes that I've been extremely sour on, um, their price action is telling a different story right now. And when I see price action off the lows like that, it tells me to override like my sentiment on the group and really start to look at the leading stocks within the group and look for those higher pullbacks. Because if you can get on to an emerging theme early while sentiment is still pretty ugly, you can ride trends for quite a long time, which I've done with XBI, biotech ETF. This was an emerging theme that we talked about down here, finally starting to show some higher lows, tested the 200-day moving average. And then when we got into the support gap in the 50-day here, that was a nice do or die spot on if this trend was actually going to emerge to the upside or break down. And this is a lower high. Broke to the upside. And still for multiple weeks as this trended up, no one was talking about biotechs until it broke basically $100. And from there, it went up another 22%. But you could get in a little bit earlier and on the individual leading stocks within a theme if you go through an industry ETF list every single day. And getting to the long and the short setups, we got 14 long, 6 shorts. MU talked about this on the leaders list. We got over that kill bar high. Don't want to chase it into a resistance gap or where I know sellers have been present in the past. We'll watch for a pullback into the 20-day moving average, into the gap zone here at 223.65. That's the spot I'd look to get more aggressive. You could take it on just an undercut of today's like gap or the support gap that was proven today at the 10-day EMA, the 230 spot. It would just be a little bit earlier in like a market pullback where you typically expect like 2 or 3 days of chop and pullback before buying power comes back through. But if you just have to have something, I think MU at the 10-day is okay. MU at the 20-day, a little bit better. We'll hold off on MSTR for the end. GEV, a energy name that I've been tracking. Zooming out, we could see multiple sell-offs getting supported at this 540 spot. That support gap through there, just multiple times getting soaked up. Then we're starting to build some higher lows. We popped over the 50-day moving average. You never want to like chase that move, but now we're pulling back into the 10, the 20, and the support gap here at 572.70. So an undercut and reclaim of that area would be viable, especially if it gets back over the daily VWAP as well. Then the stop would be probably like 560. I would say like 3% on this name. Rivian has been a pretty loopy trader. If I zoom out, you can see loop, 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 loop. But also, if I zoom out, you can see just how massive this weekly base is from 2024 till now. So about 2 years, starting to build out higher lows. Got rejected at the resistance gap, so we don't want to buy into strength right where we know sellers are present. Let it pull back into the gap zone. The 10-day moving average would probably catch up at that point, right around the 1619 spot. And then undercut and reclaim of either the 10-day, if that's lower, or the support gap, if that's lower, would be the entry. First Solar, kind of a similar idea, just a quick undercut of the support gap and the 20-day moving average. If the 20-day hasn't caught up to the support gap, I would use an undercut and reclaim of the 20-day. Zooming out that, or like kind of backing up, we see this pivot right at 257.70 that we failed at multiple times. Now that we've closed over that pivot, it could serve as potential support right along with that key moving average and the support gap too. So that 257.50 spot is where I'll be watching it. Urban Outfitters, going back to that retail clothing theme, I love how this chart is set up. We got the 200-day in an uptrend for a couple months. This is our second major gap up on earnings. And then notice this candle where we're up 13%. We close weak down 4.5%. And then we reclaim that high volume close on a pickup in volume of 5.7%. Very, very similar to the chart of ANF back in 2023, March of 2023. This, along with Elf back at that time, showed me how clean these retail names could move, especially if sentiment is poor on them. And ANF, we have the 200 starting to get in an uptrend for a couple months. It's our second earnings gap up. We get a big kind of reversal distribution bar, and then we get over the high volume close. Once you get over it, we're just looking for a pullback into that HVC, that 5-day moving average, ideally around a round number, and then you can manage your risk from there. Really nice uptrend for a little bit. Got a little shaky with like this move here, but from that, like really from that high volume close, $30, it rallied all the way up to, I guess we could cut it here at 120. So almost like a 280% gain without closing under the 50-day moving average. So these retail names, they are often forgot. They can often trend very well, especially with poor sentiment, but strong price action throughout the group. So if we get another day up and then pull back into the high volume close, that would be perfectly fine with me. But just keeping an eye at the 77.60 area, right around there to get involved. If we get a gap down, a reclaim of the high volume close would be viable. Stop would be whatever the low of the day is. But another day of pushing and then start a quick pullback while the 5-day catches up would be ideal. SYM, this is a name that I feel like I should not let it off my radar. Had a awesome move on earnings up 39%. 12.5%, followed through the next day up another 12.9%, kind of a double inside bar inside of Thursday's range. I know today was an outside day, but both of those candles within Thursday's range. We have a resistance gap here, so we're not chasing it into that area. Let it pull back into the high volume close, into the gap zone, into the 5-day moving average, right around $78 as a potential entry. If you like absolutely need this stock, then an undercut and reclaim of the past 2 days lows along with the daily view app could be an aggressive entry tactic. But I'd be more comfortable sizing up down in this range. FLNC, another name that had a pretty wacky earnings, ended the day up 6%, but you could see lots of volatility in that day. From there, higher highs, now starting to build some higher lows, lower volume pullback. Pullback into the gap zone, into the 50-day moving average as another higher low test of that 50 as this handle builds out would be a very, very attractive spot to get invested. Then we can keep our stop under $16 and keep that risk managed. BLD, Home Builders ETF, another one of those the emerging themes that I wanted to focus on the leaders. BLD to me is the leader in that theme. Little pullback into the 10-day moving average, into this kind of previous resistance area. And then a recapture of the daily VWAP would be the entry for me. Stop would be under the 20-day. If we continue to pull back, then we could get a stop under the 50-day, but I kind of don't see that happening. Real, another retail clothing line, just pull back into the gap zone, into the 20-day moving average as another higher low. That's the spot that I'll be looking at, 1345-ish. GSAT, love the little shakeout today under the 10-day, close back above. Very small gap down, which it's not ideal that we had a unfilled gap. But until we actually test that price tomorrow, we don't know for a fact that there are sellers present. At this point, it's just an area of interest to me. Just like this area of interest at the 20-day moving average, I will still take this trade as it pulls into the 20-day undercuts and reclaims that gap zone. But I'm less confident doing so because we don't have evidence that there are buyers at this level yet. Right now, it's just an area of interest, just like the gap down is an area of interest. PARR, I think it's the strongest oil and gas name, closed over two resistance gaps today. New closing high for the year, and maybe let me just switch to a monthly chart. Is this a green line breakout? I think it, no, it wouldn't be a green line breakout, but very, very strong action. New all-time closing high for any oil and gas names. That's impressive. Still don't want to buy those on strength. So we got the 10-day EMA at 44.80. That's the spot that I'd be watching for on a pullback. BW, very similar setup to GSAT, unfilled gap down, but strong close today. Bounced at the 20-day and the support gap. Now, this, because we have evidence of buyers stepping in this range multiple times, I'm more likely to take a trade that undercuts and then reclaims that support gap low right around 560. And last long, we have JMIA, a little bit thinner of a name, so size appropriately. But like how we ripped through the 50-day moving average, got up to basically closing highs for the year. Now a pullback back into that 20-day, the 50-day, the 10-day, right around this 1120 range. Then start to look for a daily view app recapture as the entry. Probably not ready tomorrow. Probably be something for like Tuesday or Wednesday or Thursday, a little bit better. And onto the short setups. Not a ton I'm seeing just yet. I think some of the weaker names, like the quantums that we talked about over the weekend, those broke to the downside. Those were great trades if anyone took them. But because we had a gap down on the indexes that got bought up and we saw pretty solid price action across the market, I'm not too bearish. I think we need more chop than anything, but here are some names to cover. And then we'll go back to that MSTR parabolic kind of short, or sorry, parabolic like mean reversal trade. So Microsoft, twice on earnings, we've gapped up and gotten sold into. So this stock was priced to perfection, obviously. We've pulled back into the 200-day moving average. You do not want to short into a key moving average, especially when it's into a support gap and a key moving average while the overall market is extended to the downside. That's how you get your face ripped off, like we've seen. Rally back up into this area, into 490. I'd be looking for another, like a day or two rally back up into this 495 range, the 20-day EMA. and then start to look for weakness as like price loses the daily VWAP or we go green to red, something like that as the entry, and stop over $500. PLTR growth name that continues to act a little bit more weak than everything else in the market, which I'm fine with. I still have 1/3 of a short position on this. Feels like a late stage base. I've covered this a couple times. Ran from $7 up to 250, probably even a little bit less than that. Um, Not 250, sorry, 205, a little bit more than 205. Then we had major sell-off on earnings, like price to perfection, great earnings, sold off. That's a risk-off signal. We have lost the 50-day, undercut the support gap, and had this like weak kind of rally back through these moving averages. Now, because we tested the support gap down here and held, I don't want to short this on weakness, like into an area where I know buyers have stepped up. I still want to give this some time to rally into the 20-day EMA and right near um, like the opening price from the Thursday kill candle. So within that 172 to 174 range, then you start to look for intraday daily weakness, a loss of daily VWAP as a short. It's a little wide to keep. I wouldn't keep your stop at the 50-day. I would just use like a 2 or 3% stop on that. Amazon, little uppercut and fail at that resistance gap. This was an earnings gap up that we saw major profit taking. Just like Microsoft, you don't want to short into a support gap, into a key moving average like the 200-day. We've had a nice rally back up, but a little bit of weakness here, closing weak in the daily range. We'll look for another little rally to start tomorrow into that 234.60 spot to short versus today's high. Netflix feels like a stage 4 breakdown. We've got a stage 3 top. We lose the 200-day moving average, rally, fail, rally again, fail again. And now this was definitely shaken out. It's been weak. The market has obviously popped back up, but the indexes are over all their key moving averages. Netflix still below their 20-day. So this is where I would start to keep track of the intraday price action. If the general market just rips again tomorrow, then maybe we do rally all the way back up to the 200-day for a retest. But if we continue to chop here, the strongest names are going to chop, but chop higher. The weakest names are going to chop and chop lower. So looking for a little bit of a rally back through that 200-day moving or the 20-day EMA, and then again look for intraday weakness. So you want to see like an initial move higher, maybe take out the November 20th kill candle high. Um, so you want to give them some reason to get bullish on it, but then price action reverses and again have evidence that that trend has reversed, like a VWAP loss, like a green to red move, or you're taking out the opening price after moving higher first as your entry, and then keep your stop above the 200-day. RCL continues to get stuffed at this resistance gap, but because some of the travel stocks are so strong, I do want to let it rally back up to the 200-day before I take it. 277, you got that resistance gap, the 200-day EMA, or sorry, 200-day simple moving average as the spot to watch. Then QBT still is one of the weakest quantum names. RGTI, very weak today as well. Just look for a rally back up into today's gap zone, into Friday's closing price, then manage risk against that 20-day EMA. But this is feeling pretty heavy. Now let me go back to that MSTR mean reversion trade. So obviously this has been in a monster downtrend. I think MSTZ, the inverse of this, could be called a true market leader because it's gone up like 400% off the lows. So not a great stock, obviously not a great stock, but we've seen major selling, a pickup in volume, and then we had one more kind of like week of relative weakness while the market ripped higher. We finally got going on Friday with like a gap up, rallied into the 10-day EMA, but then we closed weak. Today really felt like the kind of peak fear on this name, at least like on an intermediate time frame. We were down, what was it, 12% at one point today? Let's measure this. Yeah, 12% down at one point today. We undercut one support gap, we bounce at another, and then zooming out, you could see where we bounced at. And the highest volume since April 9th. So since the market bottomed, today was the highest volume that we've had. Um, and with that, I think the time to short is probably over. What I would be looking for is if we get a gap up, I wouldn't want to chase that gap up immediately. I would want to let it kind of pull back, build some higher lows under what would be the VWAP if you gap up and then immediately sell off. And then a recapture of that daily VWAP would be viable versus whatever the low of the day is. In a perfect world, we might gap down tomorrow, test this higher support gap at the 164 spot, and then I would manage my risk against today's low. But this just a mean reversion trade. If that's not in your toolbox, then this is not something that you're looking at. Just ignore me on that one. So that's going to be the daily market recap. Appreciate you guys sticking through that while I'm super nasally. But if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. I hope you guys have a great night, and I'll see you guys in tomorrow's video. Take care.